All right, let's get right into it. We're going to talk about a blueprint for building trading strategies that, well, that actually work. Strategies that are truly forged in data to survive out there in the wild. You've seen this chart before, right? We all have. It's the dream, that perfect, beautiful curve promising you the moon. But then you go live and it just becomes a nightmare. It completely falls apart. So what's going on here? Why do so many of these strategies that look so good on paper just fail so miserably when real money is on the line? Well, there's a name for this enemy, and it's called overfitting. This is the big one. It's when your strategy gets so good at explaining the past that it becomes totally useless at predicting the future. It's basically learning all the random noise, not the actual signal you're looking for. Think about it this way. A really good model, it's simple, it's elegant, it finds the real underlying trend. But an overfitted model, oh man, it's just this tangled, complicated mess of rules trying to explain every single random little thing that happened in the past. It might look super smart, but it's incredibly fragile. Remember, the goal isn't to be a perfect historian. It's to be a decent fortune teller. And this right here shows it perfectly. On the left, you've got a model that gets the general idea. Sure, it's not perfect on the past data, but it understands the trend, so it has high predictive power. But look at the model on the right. It hugs that past data perfectly, not a single error in sight. But the second you give it new data, boom, catastrophic failure. It's completely lost.
Now, this isn't just some abstract theory we're talking about. The whole method we're about to walk through was literally born from the ashes of a very real and very, very expensive failure. The project that started all this raised about $1 million from investors. So yeah, the stakes were incredibly high right from the get-go. And the whole thing was a total roller coaster. The project kicked off in 2017 with a team of really smart people. By 2019, they had a prototype up and running. But by 2020, it all came crashing down. Hard. And out of that wreckage, they had to start over with a totally new way of thinking.
So just how bad was this collapse? I mean, this quote right here tells you everything you need to know. We're talking lawsuits, arrests of company directors, a total disaster. But, and this is the crucial part, somehow in all that chaos, a few people managed to hold on to the data and the code. The core ideas survived. So what was the big aha moment they had when they picked through the rubble of that failure? It was realizing that the market we see isn't the whole picture. There's a hidden structure that most of us are completely blind to. It turns out market data isn't just one big stream. It's layered, like a pyramid. Down at the bottom, you've got the retail network. That's where you and I live. But above us, there are these other networks for corporate and institutional players. And the huge realization was that if you're stuck down here in the retail zone, you just don't have enough information to make truly high-level decisions. And that brings us to the new game plan. The big institutions, the market makers, they see everything. They know where the big orders are, who's trading what, and they basically exist to make sure you don't beat the market. So the goal changed. It became, how can we use math to figure out what they know so we can see their moves coming instead of just being the liquidity, the money they use to make their profits?
Okay, so with that new mission, they had to build a system that wouldn't just survive, but thrive. And that led to this incredibly tough 3-phase validation process. Think of it like a gauntlet that any strategy has to run through to prove it's the real deal.
And here's the blueprint for that gauntlet. Phase 1. You do an initial optimization on historical data to see if there's even an edge to begin with. Phase 2. You do what's called a walk-forward validation on new data the system has never seen to see if it can actually predict anything. And then, Phase 3. An all-out stress test to make sure it won't shatter the second it hits the chaotic, real-world market. All right, let's look at Phase 1. The very first step is just figuring out if you have a genuine, repeatable advantage. Is there actually something there to exploit?
So what we're looking at here is this really cool 3D graph. It's basically mapping out how well the strategy performs across a bunch of different settings. And the key thing here is we're not looking for one single tiny magical peak. That would be a sign of overfitting. No, we're looking for a broad, stable profit zone, like this smooth hill you see. The fact that most of this whole surface is above zero tells us we have a real logical trading edge. It's not just a random fluke.
Okay, so you found an edge in your old data. That's great. But the million-dollar question is, does it actually mean anything for the future? That's what phase 2 is all about. And this is the moment of truth right here. This chart plots how the strategy did in the past versus how it did in the future on data it had never seen before. That R-squared value of 0.75, that is incredibly strong. It means there's a high correlation. That past success wasn't just luck. It actually has predictive power. In fact, 61 out of the 64 best versions of the strategy stayed profitable. That's huge.
So, the strategy has found an edge, and it's proven it can predict the future. Now it's time for the final test, the trial by fire. Can it survive the messiness and imperfection of the real world?
This is the stress test. What we're doing here is deliberately messing with the system. We're throwing in random data noise, we're adding delays to when trades execute, all the stuff that happens in live trading. And look at the result. That orange layer shows the worst-case performance under all that stress. And the most important part, it stays stable and it stays way above zero. This proves the system is robust. It doesn't just fall apart under pressure. So what happens after a strategy survives this three-phase gauntlet? What does the final result actually look like?
The journey is complete. The first tests proved a real advantage existed. The next tests proved it could hold up on new data. And the final stress test confirmed it was stable enough for the real world. The verdict was in. This system has a genuine, stable, and most importantly, an exploitable trading edge. And here is the ultimate payoff. This wasn't just some theoretical exercise. The system that was built using this exact process, it went on to become the 2025 TradingView Tournament champion. Yeah, the champion. It was literally crowned the most efficient system they tested. Think about that journey, from $1 million catastrophe to a world champion. Incredible. Which really leaves us with one big question to think about. We've seen just how easy it is for a strategy to look good and then fail spectacularly. So in a market that's pretty much designed for most people to lose, is this kind of intense, data-forged resilience not just a nice-to-have anymore? Is it the new price of entry just to survive?